stock. Look at that, looking good. Not so since then. He sold it, never back to even, never back to even. So he had 48 stocks total over 15 years in the portfolio. The stocks that underperformed were 10. And as we just discussed, they never went back to getting even. Not a single one. Not that it doesn't happen. It happened to one of our stocks a year ago when Five Below turned around, but it is rare. And you can't count on that. So when your chart shows consistent, not just a quarter, but 2 or 3 or 4 quarters of bad fundamentals, go ahead and sell the stock. It's not going where you want it to. But you see, remember, he's a better investor. So you have the rule of 5. Guess what? 48 stocks, 10 went bad. That is exactly what the rule of 5 in better investing. 5 stocks, 1 stock out of 5, 20% will go bad. Just like that, 10 out of 48. Perfect. And then 3 stocks will do more or less as expected. So that's the 22 stocks. And 16 outperform, which is better than 10, because you would think it'd be 10, but no, it's 16. So this is just what better investing teaches us. Out of 5 stocks, 1's going to be bad. You can have a beautiful stock selection guide. I mean, literally made in heaven, looks so perfect, but it goes bad. That's the way it is. Get over it. But you're going to outperform on the other side, and then you have 22 stocks, and this portfolio did well. He actually did better than the rule of 5, because the rule of 5 would suggest 30 were more than expected and 10 outperformed, but instead he had 16 outperformed. That's the key lesson here, fundamentals. Oh, anyway. So this is what he did this past year. He's going to sell LKQ by Microsoft. He bought it, and it's gone up significantly since he bought it just last week. Bingo. It doesn't mean anything, but when I talked to him yesterday, he goes, I was surprised. I'm happy. So, okay, here's the slide everybody needs to take some time to look at. Is computer-aided stock analysis portfolio a better investing portfolio over 15 years? Grew at an annualized growth rate of 13.3% versus 11.5% for the S&P 500. Once again, he beat the S&P 500 significantly. Therefore, he beat the index S&P 500 significantly. 2% is huge when you start putting the money together. Plus, he had dividends of another $24,000. So actually, his annual growth rate, including the dividends, was 13.9%. We're looking for 15%. He's just a little bit away from that. Remember, this is in good times and bad times over 15 years. The next point is by weeding and feeding, weeding the bad fundamental stocks and feeding good quality stocks, he had an $89,000 improvement, or essentially a 40% improvement over if he just held all these stocks. Very important. By weeding the bad companies out, which we did a few months ago, you have a better chance of markedly improving your portfolio. This is what he's demonstrated. And Nick has done this for 15 years. I've listened to him several times, and these are absolutely superb results. So let's do a little review. What Nick has taught us. What did Nick teach us with the computer-aided stock analysis? Using better investing principles, he outperformed the S&P 500. This success is from disciplined applications of BI strategies of long-term growth. I would also note that over 15 years, only approximately 8 to 10% of active managed mutual funds outperformed the S&P 500. And Nick outperformed it by more than 2%. Bingo. Very well done. What is the investment methodology? It's what we teach every month. Purchase and sell. We buy better investing stocks. We use the better investing methodology. He restricted his purchases to a single day each year. So even if a stock was acquired in a takeover, as I said earlier, he could not reinvest it to the following April. It probably would have done even better if he, let's say, the stock was bought and takeover in June. He could use that to invest. He did not. He restricted to 1 day a year. Stocks were sold for 3 reasons: change in fundamentals, identification of better opportunity, or to trim an oversized position. The stock sold to deterring fundamentals did not recover, not a single one, underscoring the importance of not holding on to investments in hopes of breaking even. When the market was down, Nick was not emotional. He just said this is a good quality portfolio. It maintained its fundamental approach, and he did not alter his investment criteria. Next thing, stock selection and emotional discipline. New stocks were identified by a stock screener. Use FinViz. I can share how he uses FinViz in a moment. But FinViz was the preferred tool. He also uses the better investing screeners also. Throughout the investment process, he avoided the emotional and cognitive biases that we all have. It's all in our DNA. He avoided this. He stuck to fundamental better investing methodology and was disciplined. His continued strong performance. And the other thing, he had very few tech stocks. I thought it was very interesting that the last several years it's been about tech. He had very few tech stocks, and he demonstrated he could do superb without the tech stocks. Now, are there any questions before I show the screener or any comments?
Well, I had a question. Is it possible to see the original presentation or these aren't recorded?
No, they are recorded. It's on recording. Yes. I tell you
Where do you
what,
find those?
I will, if you send me your email address, I will send it to you.
Okay.
And I'll send it to all club members, but any visitors, if you email me, and my email address is R for Randall, W for William, Bus, that's my name, MD is in medical doctor at AOL.com. If you email me, I will share this with you. This is recorded, and I would recommend you listen to it if you have time.
Thank you.
You bet. Any more questions?
I
just have a comment about that. Oh, go ahead, Ione. It's probably the same comment.
I'm going to repost the link for all those who may be new and want to register for our other South Florida chapter events. You can do so with this link, and this recording, Randall's going to send it, but in general, you would need to be registered for it to, I believe, get the recording in for future reference. So I'm going to reshare the link. So thank you. Go ahead, Laverne.
That was the same thing pretty much. The email, an email goes out with the recording to all the registered guests, no matter who they are, and it actually comes from Ione. So you might want to check your Zelda. I think that was you who spoke, and I've seen you on here a lot. So you might be getting it. It might be going to your spam or your junk mail, but it comes out like a day or another, either the same day or the next day, sometime close to the meeting date.
Yeah, I don't think he has been sharing. I mean, when I talked to him just the other day, he was sending it to people who requested it. Now, maybe he changed his mind and sending it, or the other chapter shared it, which I would completely agree with the chapter sharing everything myself. But anyway, yes, if anybody wants the recording of this, I would completely agree. First, well, I only need to register for these. And number two, I will send you this recording. I'll be glad to. Any more comments about the portfolio, about its methods? Or questions? Okay, I'm going to show you how to get on FinViz. You can do it direct from your Better Investing website, which is even better. Okay. So you're on Better Investing and you hit research. Bingo. And then you go down here to analyst estimates. Bingo. And FinViz right there. Bingo. You hit that. And you're on the FinViz website. Just imagine there's a lot of pop-ups. You got to live with them. So from the FinViz website, you go to Screener. Now I will tell you that Nick does this on the recording, so you have to remember this. He goes to fundamentals. He goes PE, profitable, both in the past and in the future. Earnings per share growth over 10%. Sales growth over 10%. Earnings per share next year over 10%. Net profit margin, because he doesn't want commodity companies, over 10%. He looks at return on equity, more than 15%. Better investing. This is all better investing stuff. Return on investing capital, yes, over 10%. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, these are the 8 that he uses. So that is take it down from like 5,000 stocks to 124 stocks. Now, what he next does is he goes now to descriptive. Let's say we want to buy a stock in a certain sector. Let's say, for example, we want to go into healthcare. Bam. There are the healthcare stocks he would be interested in. There's ResMed. MedPace we have in our watch list. Eli Lilly, which is the leader in GLP-1. Intuitive Surgical in the robotic instruments. Alzheimer's, a common stock owned in Better Investing. I will say I personally own that stock. But if you want to say, well, I don't want healthcare, I want financials, Bing. Axos, we've owned Access before. I currently own that stock. MasterCard is going to be on that. I think Visa's probably on it too. Let's see. Yeah, Visa's on that. So this is how he uses this FinViz screener. Now, once again, he explains this. You don't have to remember this unless you can send out this recording, but he shows it with in his presentation also. You will find many of the stocks that you find in the Better Investor Screener, and I like Better Investing Screeners very much, as I discussed many times, particularly the A-listed stocks and the small company stocks. But a lot of times the same stocks show up on that screener as this screener. This is how he uses FinViz for people who have not used FinViz. But the nice thing, as I said, you can get directly from your Better Investing. Once again, research, analyst estimates, FinViz, bingo, and you go to screener and start doing your screening. Any questions on that?
Randall, I do have a question. Can you use FinViz to get, like, obviously the category there is analyst estimates. You're doing a demonstration here of how to use it to screen for stocks, but say you have a particular stock on your screen in the SSG, and then you go to FinViz for analyst estimates. Can we use FinViz to get projected sales growth and projected earnings kind of analyst estimates in FinViz as well?
I believe that he shows that, but I can't show that. I've not
Okay.
found that myself. But actually, in the recording, he shows how he did it on the stock, for example. So let's see, financials.
I was on his webinar last weekend,
Yeah.
and in fact, I looked to see if he was demonstrating the stock screener, but I didn't see where he showed analyst estimates. And I thought, because this seems to be a very good site, I had not used it before. If you could go to FinViz to get another
Yeah.
projection of earnings and sales, but I couldn't find anything. I went to FinViz after the webinar, but I couldn't find how to do that.
Yeah, I've had the
I
same
think if
problem.
you,
Here,
Uh-huh.
I just showed his 3 years, 26, 27, 28. But I haven't been able to do that. So yes, somebody else was mentioning.
I think if you keep going down
Okay.
below all these graphs, and you're going to see, there you see, oh me, I think keep going down. I think now, see right on that 1, 2 second, it says earnings next 5 years, 9.23%.
There you go. There you go. Now we know. Yeah. There you go, right there.
Excellent. Thank you very much. And that's at the bottom of the screen. So say you're looking at a stock screen and it's down at the bottom, EPS next 5 years and sales probably in there too, I guess. But great. Thank you very much. I appreciate it.
Yeah. Thank you. Thank you. I did not see that. Thank you very much. Very good.
One more question. So I only posted the link, but it seems to be just for the Saturday meetings. What's the name of this meeting again? The one
This
that
was-
you did the
This was
presentation?
it was the CASA portfolio. We do an education. Nick and I do an education meeting second Saturday of the month from September through April.
Okay,
And it's the chapter educational segment.
chapter educational. Okay. I can't make that because that's when we have our meetings, but that's why I was wondering if it's recorded anywhere.
It is recorded. I'll send you the recording. Just ask me for it. I'll send it to you.
Okay.
If you
Okay,
go to the
so-
bottom of that column,
Yeah.
it
Yes.
says, it tells you when the next earnings report is. February 25th after market closes, AMC. That's a quick way to find when the next quarter ends.
I'm sorry. Where do you see that?
Go right below the 9.23, go to the third line from the bottom up. Oh, okay. Okay, go to the left. There you go, right there. That's the next quarter.
There you go. Excellent.
Now, a lot of clubs use RV. Let's see, what are the initials? RV relative. She got. I'm not seeing it though. Where is? Oh yeah, this RSI on the next column over, about 4 from the bottom. Oh, okay. Now go to the right, just a little bit. There you go. One down. There's your RSI of 61.33. A
Just
lot of
explain what-
clubs.
Yeah.
That's technical analysis, but a lot of clubs are using that now.
Yeah, just to mention, if it's below 30, it means it's cheap. If it's above 70, it's expensive.
Right, right.
Oh, good. I learned a lot just sharing this. Thank you.
Yeah, Bob, can you speak a little bit if you know, about being oversold and overbought, if you know how it relates to RSI?
Well, he said exactly the right thing. About 35 or so. It's either underpriced or it's so low that it's not worth buying. Or if it's above 75, then you need to be careful. That's about all I know about it too.
Yeah.
Yeah.
Any more questions? let's move
Randall,
on.
sorry, you said there for the RSI that anything under 30, could you repeat that?
Yeah,
I
generally
have
people.
30.
Yeah, go ahead, Bob. Go ahead, Bob.
No, 30 or 35. What do you hear, Randall?
I've heard both. It just means
Yeah.
when it's less than that, it's considered cheap. It may not be good quality, but it's cheap because people have been selling the stock. The momentum has been selling the stock. But if it's above 70 or 75, it means it's, if overpriced. You could probably just look at your SSG and see where the price of stock is compared to, the 12-month high and low. That would probably be very similar. A lot of people like to use that. Some people will screen using RSI. Let's say you can screen if it's, if you get all the fundamentals good, and then throw in the RSI and see if you get something, RSI that's cheap. That may give you an interesting group of stocks to look at.
Thank you.
Yeah, after you found good fundamental stocks. Any more questions on this topic? I think to summarize, I think what Nick has done, he's done over 15 years. This is not something that he started last year or last month. And he's demonstrating the better investing fundamentals. It's amazing that he trades once a year. So these people like to trade every day. That's a good way of losing a lot of money. You trade rarely, buy high quality, and trade rarely. That's a winning strategy. He's demonstrated 15 years. He's beaten the market. I think he actually, the first 2 or 3 years, he was below the mark. He says, well, I don't know if it's going to work. And then it just took off. He's done well. So he's to be congratulated. So we'll move on. Did Group 4 have any stocks to offer to the club?
Hi, Randall. This is Yvonne. No, we didn't have an opportunity to do anything this month. Apologize for us as a group. 2 of our members aren't even available.
Oh, I'm sorry. Now,
So
Valencia,
we'll
yeah.
try again for next month, okay?
Great.
Thank you.
Valencia, can you present Cintas that you were going to present last month?
Oh, no, I'm not. I'm sorry, though. I'm not prepared. That's what I was on the agenda last month. I was prepared, but okay, then we didn't get around to me. But I was like, I didn't fret it. So I'll be prepared next month.
Okay. I gave a presentation on if I can bring it up. Sprouts Farmers Market. Would y'all want to listen to Sprouts presentation? I'll present a stock. Let's do this. Let's do that. Well, let's see.
Did you do that presentation with the North Florida Club? I know they presented Sprouts Farm.
No, I did not. I'm trying to. Okay, let's see if we can get this one up now. I'm having trouble finding it. Keep on getting back to this. Okay. Okay, there we go. Okay, now let's try it again. Here we go. So this was a presentation. Can you see Sprouts now?
Yes.
So Sprouts was a stock that this club purchased, I think, probably about 5 years ago. And it did very well. I think it went up to like 85 or 90, and we sold it. And the stock kept going up. And then the last 6 months, it dropped rather dramatically. So this is, Sprouts is showing up on the Better Investing Stock Screener. This was, if you clicked on this button here in the stock screener, Sprouts, it shows you the sales earnings going forward. You also saw the price was down to 12 months. So I thought it was a stock to look at. So what is Sprouts? Sprouts is a grocery store that helps people live and eat better. It's a health and wellness grocery store. It targets out of 1.6 trillion on food, it targets 290 billion. Focus on natural and organic products. It currently has 477 stores in 24 states. Those states are just California predominantly, Florida, Arizona, Colorado, and Texas. And half the country doesn't have any stores. And a lot of these, like South Carolina, 2 stores, North Carolina, 7 stores, Virginia, 3 stores. There's a lot of room for growth. So let's look at how it has grown in the past. And this is from their annual presentation. Sales have grown an annualized growth rate of 13%, double digits. Gross margin has grown 210. Return on equity, return on investment income has gone up 590, and the EBIT annual growth rate is 24%. From 2022 to 2025, the annualized growth rate for earnings was 31%. This shows that they're constantly repurchasing the shares in the years. And their purchase shares is more than their CapEx spending in most years. Although they have grown their CapEx, they're opening more stores. Like, I think 40 or 50 stores a year. Yeah, they're growing their unit growth 10% per year. New store economics, stable EBIT margins. This is the value line at that time. You can see the price of the shares. We cut it here. We sold out, went up, it's back down there where we purchased it. Now, if you look at this value line, they are believing that earnings sales will continue to grow at 14% per year and earnings at 19% per year. This is from Morningstar. They considered that this time the stock was 48% a discount, but it was only 3 stars due to its uncertainty rating. Here's where they had to start that problem. So if you look at their quarterly trajectory of sales growth, 25, 11% the first quarter, 10% the second quarter, 5.9%, down to 1.6%. And that is why the stock tanked. That's the major reason the stock tanked, because their sales growth went down. They expect that to return, but not to 11% growth for same store sales, maybe more to 8%. But then you're 5, 6, or 7, 8, but also you're growing the stores by 10%. So your total sales growth should be probably in the upper single digit range. So for 26, same store sales to be flat, sales, total sales growth to be 4.5 to 6.5. They're opening 40 new stores. Earnings per share in this range. First half of the year, which we're in, is challenging with sequential comp improvement, but after we build forward our long-term financial algorithm later in the year, they should improve. At least that's their thoughts. This is a stock selection guide. For last quarter 25, earnings per share were up 16, the sales were up 7.6. I picked 8 and basically 10.9 as their sales and earnings forecasts. Now, pre-tax profit, you say, well, that's only 6 or 8%. Most grocery stores in the 1 to 2% range. Return on equity is better than 15%. Debt to capital, that is skewed because they lease a lot of their stores, and so their debt is really a lot of leasing. That you see in all retailers these days. So I looked at data. Earnings per share, and we're up 16% last quarter, up 34% the previous quarter. Sales were up 28 and 14%. These are the numbers I got from CFRA, earnings per share, 5-year, 3 years, 15%, Morningstar at 13%, Seeking Alpha 8.4, Value Line 19, Saks for procedure. It averaged to about 12.8. I use preferred procedure because I think it's more conservative and more consistent. That was the number I used. That's the preferred procedure, 10.9%. That's the whole class. If anybody wants to teach, wants to learn about preferred procedure. The more senior you get in better investing, the more often you rely on this instead of just the finance estimates. So this was the price from a month ago. I'd have to update it what it is now. Its price was 75. It had been as high as 182. Low is 64. After this presentation, I can quickly go to Better Investing, see what it shows. And so it gave it basically at 16% at the forecast IP growth rate. So in the past, this company has qualified as a high quality growth company by all BI standards. Recent quarter, it's seen a drop in the same store sales. With drop in the same store sales and concern of competition for Whole Foods, the stock dropped 50%. If the company can return to steady growth of sales, the price will likely double over 5 years. That's a big if. So let me stop sharing and show you the updated Better Investing, the updated SSG. Here we go. Is that person? Where is it? It disappeared. Maybe it's here. Oh, it's in the stock screen. Here we go. Now I'm going to bring it back up. Give me just a second. I have to. Oh, here. Well, that's. Bring Better Investing back up. I'm on, Randy. Here's the Sprouts Farmers Market. Same earnings per share. That was from the last quarter presented. But let's look at the valuations. Can y'all see this?
Yes.
Yeah. So the current price is still $74 per share. It's gone down $1 in the last month. The current P is 14, which is the 5-year average PE. The forecasted price was go up to $160. Low price, select low price is $53. Is currently in the buy range. However, if you buy this stock, you must recognize the sales growth must improve. So, and the forecast annual return is 16.7. So that's the presentation on Sprouts. We've owned it before. I thought about this yesterday. As if we owned it before, instead of selling it outright, we should have trimmed it. Now that's a new thing that we've been using the last few months. And then we could have trimmed it the higher it went and then purchase it again. But the fundamentals have been pretty solid. This is not a fundamentally bad company, going back to quarterly data, which we always shared. I mean, the last quarter, earnings per share were up 16%. I would say, I don't know when the earnings come out, but actually, I know how to look for it now because Bob showed me how to find it. I'll go to FinViz.
What made you sell it the first time? You just wanted to take your profits?
Are you going to, I only wanted to answer that question. Why did we sell it? Ione.
Randall, this is Yvonne.
Yes.
As I remember, we sold it because it had met our requirements. It had doubled in price, and so we sold it.
Okay.
It fit the AG, the better investing methodology.
Randall, this is Carmen. My recollection was that the price was really high and
Yes.
didn't have much return.
It kept on going up.
But the fundamentals were coming down. It was the
Yes.
year, I believe, when was that? 21, 22, when we sold it? And looking at the graph, you can see that pre-tax profit is kind of going down in some of the years.
Yes.
So I think it was that there was, probably the torpedo graph was coming down. I remember we took the profit, let's put it that way.
Yeah.
And we did well at the time.
Oh, we did. Yeah, it did very well. It was our best stock by far at the time.
Yeah.
And as the emotional market took it even higher. But it may have fundamentally be, actually, if the fundamentals are going bad, that's the time to sell. The next earnings isn't until April 29th. So that's 3 weeks from now. So if we were going to purchase this, I would probably want to wait and see what this quarter's, particularly sales growth is. But it's, I still think it's an interesting stock. Just because we sold it doesn't mean we can't buy it again. Because quite honestly, they've done well since then, done very well. So anyway, we're at the time we have to decide what to do with the money we have. And we have 10 minutes left. Does anybody wish to purchase any of the stocks, or not only this stock, but we can look in our portfolio. I've seen what stocks we might want to purchase in the portfolio with $1,700. I know. So you would want to purchase, if you're going to buy something from the portfolio, you would want to buy something that's a fundamentally good company. You're not particularly worried about it. So that would kind of take out Vital Farms. But these other companies that you think are fundamentally good, and to improve your total return.
Rhonda, we have
Yes.
several invalid SSGs, so it should not be reasonable to make decisions based on the total return. And probably,
That's
but
why, let's see why. Let's say, for example, Qualisys. Why is that true? This is Ione's. Usually it means you picked a price too close to the present price. Yeah, the reason it's invalid is current price is $83 and the forecast low price was $101.
yeah, so you will have to change the low price and
To
probably
60,
high
yeah, 60.
price. So probably you will not get the 30% return, or I feel that something like that.
Yeah, I switched the low price to $66, which is 20% less than the current price. But you're probably right. I mean,
And probably the high price is too high.
yeah, because the earnings per share is only 544 and we expect it to go up to 876. Well, we would drop the average high P. 5-year average PE is 45 and 55. But
And current is 30.
But look, the sales are only recommended to go up 7.6 or 2.9. So you're right. You would not want to purchase this stock because at least it looks like the earnings are going to go not well. But anyway, I completely agree with your assessment. You don't buy stock that's invalid. But I'm just trying to say, as a club,
we can always do what Nick does.
there you go. Once a year.
Once a year.
So anyway.
And I'm expecting the new quarter will come up soon. So by next meeting will be fresh data.
Yes. Yes. So, but you're absolutely correct on you can't use invalid data. But usually invalid data is because the price of the stock is so close to your chosen low price or below it. It makes it
probably
invalid.
below. Yeah.
Yeah.
To be invalid has to be below the current price, below your lower estimate.
Yeah. And sometimes you get a very high upside downside. It's not quote invalid, it's just very high. You have to correct your lower price usually. So, for example, Ollie's, there's two different stock selection guides in here. This is from the club, 64.5. I mean, the 24.5 upside downside. I would bet there's a reason for that. So. Any more discussion about, does anybody want to buy a stock of any type? Fine.
How about if we wait for next meeting, we'll have the first quarter results by then.
I completely, particularly we could look at Vital Farms, we could look at Sprouts. I completely agree with that. So the next meeting, Group 4 needs to present education. Okay. So since I'm in Group 1, we don't have to present education because I did it this month. Thanks to Nick. And Group 4 will count on education, and Group 1 will bring a couple stocks together. Okay.
Randall,
Yes.
this is Jennifer.
Yes.
Why are we showing two entries for Ollie's in the?
I don't know. I would have to. What's probably gone into. So, what I have to.
Is there a way to remove the incorrect one?
Oh yeah, yeah. I did this yesterday. I was removing other. So what you go in here? So South Florida Model Club. And what you do is to remove it, you go to edit, you go OLLI, and you find out the bad one.
That's the 418 is the good one.
Yeah. Oh, I see. Well, the reason is when you send me a stock, you send that to me, I put it into the portfolio.
Mhm.
But the older stock or the older SSG is the one that has the shares. So I would have to go in, change it to put the shares in the new SSG, which I can do.
Because that with the 24 upside down side, that's not an XSG that I would have provided.
Well, that was an old SSG.
An old
You're
one
right.
from
Yeah,
someone
it's
else.
an old SSG.
From
Well-
not from someone else.
Well, no, it says Jennifer right there.
Where?
January 16th, right there. I'm
Hmm.
pointing.
Interesting.
But things change. And so you update it. That's what we do. We update our SSGs.
Hmm.
So you updated it, and that's why your present one has an upside down side up 4 or something like that.
Hmm. 'Cause I've never seen a 24. I've never seen. I'm gonna check, but I think
Yeah.
maybe we can remove it
Sure, I'll do that. I'll do that right after
because
we
it
get off the
might
meeting.
skew the overall picture.
Yeah. So this is the time of the meeting. We open up for any visitors. I mean, we've had some great talk from the visitors already, but what else? Anybody wish to share something with us?
Well, just really quickly, Randall, this is Valencia. Can you put me at the top of the meeting? I was going to try to get the Centus report by updating it when you add.
Yes.
But can
Okay.
you put me at the top of the meeting for next month so that we can go over Centus?
We certainly,
Cinta?
that'll be one of the stocks we share. Yeah, it'd be
Yes.
great.
Okay.
Any guests?
Well,
Well, I will, yes, go ahead, Zelda. We
I guess
always hear,
so.
I'm waiting for you. You always talk.
Oh.
We'd love to hear what you have to say.
Oh no, I really appreciated the meeting. I'm saying like my mind is blown. Like I'm trying to process everything. Like I want to do the PERT, and learn more. And now you have this new stock screener. But I know it's all good. It's all good. It's
Well,
just encouraging me I need to just schedule a time every week to, dive into this. And I always say I'm going to do that, and then I never do. But it's just like everything. It's easy to get overwhelmed, but you just got to break it down into small bites.
Are you going to Bink this next week?
Yes, absolutely.
Oh,
Yeah,
I'll
I'm gonna
see you
be
there
there.
then.
Yes,
I'll see
I'm
you there.
looking forward to it.
I hope
Thank
as
you.
many people can make Bink as possible because
Yeah.
it's really nice.
I'm excited.
Anyone else?
Oh, Randall.
Yes.
Could you, I was just putting in the chat, could you share with us at some point the presentation that you did with the PERT report? The training that you did, I think it was January or was it December? I think it was December 20th.
Okay, I don't have that recording. I will I'd have to talk to Tony. So
And I think it'll be a great opportunity for everyone to kind of understand the offense, defense, and how we look at the PERT report. And it'll be a good refresher for myself as well.
I'll ask Tony if it's recorded, if he can send it to me. If he sends it to me, I'll send it to the club.
Okay.
I believe there is a recording about the PERT on better investing.
Yes. Yeah, there's
I
several
think-
podcasts.
I think the one that Randall did is in our Facebook group also.
Recommend?
Yes, yes.
Oh, good.
I
I'll be
think
honest.
I think it's in the Facebook group, but we can research that. But if it was recorded here as a part of the monthly meeting, I think it's in the Facebook group.
I will be honest with you. I've been a member of Better Investing since 1989, but I didn't understand the PERT report until I spent 40 hours getting that presentation ready. I finally understood it. So if you're new to Better Investing after you understand it, well, you're still 30 years ahead of me. Okay, our next meeting will be on May 16th. Always the third Saturday in the month at 10 a.m. Looking forward to see all y'all there and hope to see a lot of y'all in Bink. Thank you.
Thank you. Have a
And
great weekend.
goodbye. Have a
Thank
great
you for
Thank
the
you.
presentation. Thank you.
Take care.